Good afternoon, ladies and gentlemen. It's a great pleasure to be back in Berlin, and an even greater pleasure to have the opportunity to welcome 5 of our leading CEOs onto stage to join me for what I'm sure will be an interesting hour of debate. So without further ado, if I can ask each of them to join, I'm going to try and remember what order this is because it's changed about 5 times. First up, my good friend Federico Gonzalez Tejera from NH Hotels. Federico, last seat. Next up, Richard Solomons, CEO of Intercontinental Hotels Group. Richard, nearly president. Wolfgang Neumann, President and CEO of Residor. Herr Neumann. Chris Nassetta, President and CEO of Hilton Worldwide. And finally, Jeff Bellotti, President and CEO of Wyndham Hotel Group. Jeff. So in the time-honored tradition, I'm going to make a few opening remarks just to sort of set the scene, and then I'm going to join the panelists to talk through what's on their mind. But what I have agreed is that we're going to take certain things broadly off the table, although I have to tell you I've got absolutely no confidence one of these gentlemen will not mention pipeline. Let's just say they all have a lot of hotels, a lot of hotel rooms, big pipelines, lots of brands, and they're in plenty of different countries. So if we can all agree that it's just a question of scale, hopefully we'll get into the nitty-gritty. And the nitty-gritty is fairly substantial. The theme of this session is ripped from the headlines. Well, that was the theme I was given. So I actually did a little bit of background, and if you go through the headlines over the last year, there's an almost endless list of things you could be worried about, a few things that you could think are looking good, but much more things to worry you, quite frankly. The Zika virus, the slowdown in China, the refugee crisis, 1 million refugees arrived in Germany last year alone, the strength of the dollar, Brexit, Grexit, the North Koreans. I don't know if you saw the press this morning, but the North Koreans announced they were going to turn Seoul and Washington into flames and ash. That's not the sort of type of rhetoric that's going to make you feel comfortable if you're living about, 50 kilometers from the DMZ. We've also got a lot of new areas emerging: Iran, Cuba, Colombia. But generally it feels that there's a little more to be nervous about than to be optimistic about, so we'll talk about that. Of course, if you wanted to be nervous, then the last 12 odd months have been a year where we've all seen the impact of terrorism. It's happened pretty much everywhere. Paris, obviously twice, the Eurostar, Tunisia, Istanbul, Egypt, Jakarta, Mali, Burkina Faso. The list is pretty endless. And quite frankly, the question is, how resilient are we? Well, we seem to bounce back pretty quickly, but we'll maybe touch on that as well. Of course, in the C-suite, the agenda is as full as ever, and this is where we get into the really interesting part of the debate. Is there a disconnect between performance at the moment and the way the stock market are seeing things? Are we going to see more consolidation? Who is in charge of the customer? Is M&A about to slow? 85 billion in global transactions last year. That sounds pretty toppy. Is RevPAR going to move up, down, stay the same? And of course, I doubt we're going to be able to get through this without talking about Airbnb. Is supply growth a worry? Well, obviously, if it's supply in your own pipeline, probably not. If it's in a market which might be oversupplied, possibly, and we've had a fairly benign supply environment for some time. The list goes on. Of course, where is or where was the peak remains a topic for endless discussion. Certainly, if you're looking at the way the markets are reading it, they think it's behind us. I think it's fair to say it feels a little like we're in the second innings, or the second half, I should say. I should stick to soccer, not baseball. Everyone's share is down past the peak, but nevertheless, it does feel like the headlines particularly are perhaps more challenging than the reality. And I think that's what we're going to dig into. These are the headlines from the Financial Times and the Wall Street Journal in just the last 3 weeks. So it's fair to say the press have decided what they're making of it. So, ladies and gentlemen, that's the backdrop, and I'll now go and see if we can have any of these gentlemen share their thoughts openly. So, gentlemen, welcome to Berlin. In case any of you weren't taking notes, we're going to run through a number of questions that you may expect and some you might not, including performance, maybe a bit about politics, just to spice it up, consolidation, the customer, the sharing economy, probably, the business model, technology, the future. So if I can ask you, as you can tell, that's a lot of stuff to cover. Please, there's 5 of you. Answers are succinct and snappy, please. And no answer should include any reference to pipeline. So, generally, I'd just like to ask each of you what your take is in terms of how you see the global markets at the moment from your own perspective, and then perhaps just drill in to a specific geography in each of your individual cases. So Richard, if you don't mind, I'm going to start with you. Generally, how do you see it? But specifically, given your exposure in China and the fact that you've been trading in China for a very long time, what do you make of the situation? Is it something that's being overdone? Is it something we should be worried about? Is it just a natural correction? How do you see it out there at the moment?
I'll try and answer without mentioning pipeline, Nick. Obviously, we have a very large one in China. But actually, on a serious note, we grew our revenues in China by about 8% last year, which is pretty similar to how fast we grew them in the US. And that's obviously a mixture of RevPAR growth and adding new rooms. And we're talking in China about an economy that is still growing significantly. Whatever the actual number is, it's still growing significantly. And more importantly, people are traveling more. So if you look at the tailwinds of growth, the things that are driving growth in China, urbanization, infrastructure, and so on, those are very much there. And so all of us are here in a long-term business. So we're used to cyclicality, we're used to short-term ups and downs. But what we've got in China is a slowing of growth. And people are talking about it as if it's a decline. And it's not, it's still growing significantly. And so we're very committed to China. We see it as a very good long-term market because of those drivers. And our job is to deal with ups and downs and help our owners deal with those ups and downs by delivering as much revenue as we can. So I remain very positive about it.
I saw the news out of Beijing that they're laying off 1.8 million coal and steel workers, which obviously sounds like a staggering number. It is. There's 750 million employed. Right. It's obviously a shift to the consumer economy. Are you seeing any sort of upside to that shift at the moment?
Yeah, absolutely. If you look at certainly personal leisure travel and a lot of businesses as well, as I say, with significant growth in revenues is coming from that. And as you say, 1.8 million is a very small piece of the workforce. What you've got in China, you have to remember, is there's no precedent for China. No economy has ever made the transformation that they've made as quickly as they've made it. So it's quite hard to predict. But certainly, as I say, we may get some short-term ups and downs. I'd be surprised if we didn't. But the long-term trends remain very good. And let's not forget, the Chinese government has identified travel and tourism as one of the 5 pillars of economic growth. So the financing is there and the support is there for the business, and we continue to grow.
Wolfgang, Africa is a key feature of your growth strategy. It's been a key feature of your growth to date. I know that certainly in terms of what you laid out as your strategic objectives, Africa is a core part of your growth. It's obviously quite a challenging environment to do business in. Are you confident that it's a place you still want to do business in, and are you confident that you can grow as fast as your obviously as your ambition obviously is at the moment?
Again, no mention of pipeline. Very confident.
That's 2.
Continent of opportunity, continent that has it all, continent that needs it all. I think Africa is absolutely the future. It's a continent which has enormous natural resources, When you look at the population, 50% of the population is under 30. 1 in 3 have a mobile. There's an enormous supply of need of branded supply. So very, very confident that we can make further inroads there and develop on the continent. There's enormous development in terms of country development, more reforms, political stability, enormous infrastructure investment, and I think that is a continent where there is lots more to be done in all segments.
So far, so good. Jeff, 70 odd months of consecutive RevPAR growth in the US.
Yeah.
How long can this last?
A while. We're looking at RevPAR growth this year. We're looking at strong demand growth. I think the growth will be more on the rate side than on the occupancy side. But we're looking, like my two colleagues, at a great year ahead. We opened 65,000 rooms last year, and we think we could do more this year, and we're feeling very good about it.
No mention of pipeline, so congratulations there. Chris, if I can just ask your opinion on Europe. You've obviously had a very successful run of it generally. You've got a lot on. We'll get into some of the stuff you guys have been up to, but where do you see Europe at the moment from Hilton's perspective?
You know, we're finishing a year last year that was, I think, extraordinarily strong year. We had, frankly, the best summer season and same-store growth that we've ever seen in our history. So I know a lot of people want to talk about Europe and the West and everything slowing down. Reality is Europe was probably tied for second in terms of our major regions of the world in same-store growth. I think my guess is it will be a close second to Asia Pacific this year. So you're seeing a lot of strong results, particularly coming out of the south of Europe, as you know it comes off of the bottom. New unit growth, from a new unit growth point of view, also very strong. We had a record development year last year, record openings. We're going to open probably, and I won't say the dirty P word, but we're probably going to open 1 hotel a week on average in Europe this year. So those are, you know, that's levels of growth that we've never seen in our history. So I'm very optimistic about Europe. Not, you know, it's a big place. Not all parts of it are created equal, but by and large, we are very optimistic.
So just picking up on, he said the P word, that's actually Patrick Fitzgibbon, I think, because he's done a fantastic job. But Federico, you obviously have turned the company around. I mean, it's been a phenomenal turnaround. And obviously your numbers coming out of Italy and Spain, you know, 20+% growth in RevPAR in both of those markets. Do you feel Southern Europe has turned the corner now? Are you optimistic?
Yes, just to say, in case any of my board members is watching or listening, the company is not yet turned around. We're in the good way. We're doing a good job, but there's still a long way to go. Because if not, they will come back to me. So, but I think beyond that, I think yes, both Spain actually this year performed extremely well as a country overall. I think what we have seen in Spain is not only obviously the holiday destinations, but the urban. I mean, Madrid and Barcelona have done very well. I think what is also nice is that we see the secondary destinations doing well and without major peaks. It's like when I think it's when you look to the rooms on the books that is, you know, gradually growing and the forecasting always ahead of what is in the plans. I think that's really good. And I think part of the growth also we have had, and I think I link that to your first question about the global economy and how the situation is. I think what we are seeing is doing right the fundamentals gives you growth. I mean, there's still a huge amount of companies where you can gain share from. And I think when you refurnish the hotels, when you bring the experience to a bit of a surprising experience, you know, the consumer is ready to pay for a higher price. And actually, what we have seen, if you get the results we presented, for example, I mean, the hotels we reformed in 2014 are growing at a 35% rate. Meanwhile, the like-for-like is maybe doing well in Spain, 7–10%. So the economy is helping some of the hotels, but I think what is still in our hands is when you refurnish hotels, when you give the consumer a much better experience, they are ready to pay for it. And that's partially what we lost in Spain during some time. We were maybe a bit too shy, thinking that you need to cut costs. But actually, when you bring back experience to the consumer, they're able to reward it. So, and that will help our pipeline. So I can see the P. If not, I will be the only one not saying it.
Amazing. So they've all managed to get it in literally the first 5 minutes. So well done, gentlemen. All right, let's go a little left field quickly, just to unnerve you. We're in Berlin, the heart of Europe. Richard, Brexit. Do we need to be worried? Do you have any concern from a perspective of a UK listed company?
Look, I think from a company perspective, we're not saying anything. In fact, the UK government went around and tried to persuade people to sign a letter, and we just don't take political positions as a company, so not going to change that here. I think actually for IHG we're relatively indifferent. We're in 100 countries, and we operate in lots of different currencies, and so I think people will make their mind up whether it happens or it doesn't happen, and we just have to deal with it.
So you're fully hedged, effectively.
We're covered, don't worry.
Jeff, Martin Wolf, who's a fairly well-known commentator in the FT, said last week that Donald Trump embodies how great republics end their life. What can you possibly say in response to that? And by the way, Chris, I'm going to ask you as well. So.
What can one say about Donald Trump? That there has never been a more important time in our industry for advocacy, which is why this week Chris and I and so many folks are in DC talking about what lies ahead in terms of what's on the table for our industry. It's massive. The current administration, there are a lot of issues out there from the NLRB with labor and what that's meaning to us from a union standpoint, a card check standpoint, an extreme wage. We need tremendous, significant change in DC, but I'll let Chris handle the Trump question.
So here's what I'd say, Nick. A lot more important people than me have been taken down by Donald Trump by coming out against him. So I don't have the time to deal with all the tweeting that would go on tonight for me to, but I think he understands what is being said about him in every part of the universe, including Berlin. I think we should all think about the upside of it, which is we've been dying as an industry to have a hotelier become president of the United States. And this is, frankly, this is about as close as we've ever gotten. So I think, I view it as an opportunity, officially, for if Donald Trump in the tweetosphere is listening.
So are you announcing your candidacy, or?
No, I'm announcing Jeff's candidacy.
Wow, you heard it first. Actually, both of you have got president in your titles already, so that's probably a good start. Fede, what's the situation with your friends, the Catalans? Yes. Are they going to behave, or
well, yeah, we have a great business in Catalonia, and yeah, I think they will. I think at the end, everybody will reach a common platform. But I think what I think is interesting in Spain is there is a need for a generation change in which leaders are not only right but also can agree on something. So I think that will come, and I think when there is people who are not able to agree on anything, obviously positions go to extremes, and where there is people who are able to build relations long term, then they will give away and they will give up. But I think what is important also business wise, everything works, and we have great partners in Catalonia. They invest in Madrid. Many of the hotels that we have in other areas are owned by people from Catalonia. We have shareholders, board members who are from Catalonia. So it's many times more what is in the press and what is in the news and what is in the politicians, if you wish, than what is affecting us day by day. On the day-by-day basis, we have an office in Catalonia. When you go there, they speak a different language to the one we speak in Madrid. But if you have lived abroad 20 years, that's fine. I mean, people there should be no scandal about people expressing themselves in a different way. But I don't think there's a fundamental issue, so it's just a bit more of show that time will come down.
Fair enough. Let's talk to one of the sort of key features of the last year, which was the incredible number of deals that were done, and particularly the consolidation we've seen. Chris, you recently said that you actually expect to see more of this. You've obviously been spinning stuff out and doing some interesting stuff, but when you say you expect to see more consolidation, is it more of the sort of 800-pound gorilla type deal, or is it more the small guys getting snapped up because, quite frankly, they're small?
I think it's a little bit of both. Reality is, at this stage of a cycle, I mean, I think a couple people have said it, I still think we have lots of running room in front of us in terms of the operating fundamentals. Having said that, from an investment cycle point of view, we're clearly not early or mid-cycle. We're somewhere, in the later stages, maybe not the latest stage of the cycle. And I think if you look at it by any historical standard, that's when you start to see M&A activity occur. And I think it occurs for a whole bunch of reasons. I think it's generally a time where people are looking at other opportunities to create value when maybe some of the easy opportunities are behind them, just given where you are in the cycle, whether you're a small player, medium-sized player, or a big player. So I think, as we've seen in pretty much every cycle in my career, I think you'll see more of that. I do also think that there is, and we could disagree even amongst the panelists up here, I do think scale matters. I think for a whole bunch of reasons in our business, for distribution and a number of other areas. And so I do think there's a bit of a groundswell for consolidation to create bigger, companies that have more scale, smaller people sort of combining themselves with either bigger people or amongst themselves to continue to get scale. So we'll see. We've seen, obviously, some of the biggest deals, I guess the biggest deal really done in the history of the business. So I think I said you'll see more consolidation before that deal got done.
Really?
So, and I don't know what you'll see in terms of the big mega merger activity, but it's hard for me to think, forward 12, 24 months and think that you're not going to see more activity.
Richard, do you regret not sort of ending up with Starwood? I mean, did you look at it closely? I know you've been very thoughtful about how you've characterized it, saying that you don't want to destroy shareholder value.
Nick, I've never seen it look quite like that.
I'm just thinking of my pipeline.
That's twice.
Interestingly, if you look at the last 10 years, most of the consolidation has been organic. In that, the brands have actually grown share. Maybe not so much in the US, where the brands are already very strong, but in other parts of the world. So I don't think you have to do transactions for consolidation. I mean, we acquired Kimpton Hotels and Restaurants last year. Nice stand here if anybody wants to go and have a look at it, which is a great infill in our brand portfolio. I think scale matters, as Chris said, I agree with that, but being big for the sake of being big is unnecessary. And I think you've got to have a proposition to your customers and your owners that is an appropriate portfolio for your business and the way you run. So there may be some more, there may not, but we're happy where we are.
Fair enough. Jeff, Wyndham, I mean, out of your 16-odd brands, I mean, you basically acquired every one of them, didn't you?
We have, yes.
Have you created a brand, or have you just been nicking other people's?
No, we've never created a brand, but Richard just hit the nail on the head. By and large, all of the brands I think up here represented are growing RevPAR index, growing share, and that's the value of the brand. To the extent that more consolidation will occur, I agree with Chris. To the extent that more distribution and the power, I love Chris's new "Stop Clicking Around" campaign. To the extent that you're welcome. To the extent that we could all be doing what Chris is advertising, which is to directly educate and consumers to directly book with our brands, leads into what Richard was saying about continuing to grow share. So in that size, our loyalty programs are extremely important. Our size is extremely important. Distribution is important. But we'll look for opportunities to acquire brands, as we did last year with Dolce Hotels and Resorts. But we don't right now foresee the need to add a new brand to your question.
Well, I want to come back to the distribution and scale debate. Wolfgang, from where you're sitting, does the Marriott-Starwood merger make any difference to your life? And does it make you, do you look around thinking, is someone going to come calling? Obviously, I know you're not going to be able to say anything about what is currently sort of underway. I'm sure you're going to be very discreet, but do you sort of share the view that the drive for scale is going to sort of take out a lot of the smaller players?
There is no doubt, as said, that industry consolidation will continue. It allows you to invest in technology, it allows you to invest in distribution systems, no doubt. But the current discussion about scale is a little bit, it seems like this is the critical factor. It's not the critical factor. Scale is important, it helps you. But I think there's plenty of us out there, including Resido, if you take it as an example, even in the consolidation with Carlson, that allows us to compete. We just compete in a different way.
Yeah.
Got to work harder, be more innovative, be closer to the customer. And if you look at the emerging markets of how we have been successful there, it shows that you can compete. It takes a different approach. And I think to answer the question about Marriott and Starwood, it will certainly be not an easy integration for those two guys, and that will keep them busy for a while.
Federico, obviously your largest shareholder, HNA, I mean, that's an interesting situation, and as a result of that, obviously you're now going to go back into China, which I guess pre-HNA would probably have been an unlikely scenario. Mm-hmm. I mean, in some ways that's quite a nice shareholder. It's almost defensive in many ways. Do you share the views here? I mean, do you see HNA as a consolidator with you? I mean, is that an option or an outcome?
Well, I look to HNA as a shareholder. You know, I think they are an important shareholder, and obviously they are an independent company to us. So I think we need to be extremely careful. I look to them as a separate company sometimes, and other times as a shareholder. And I think, for example, in China, in the company we are launching in March, I see them as a joint venture. So it's kind of having a kind of relationship that sometimes is confusing, but we try to create Chinese walls, okay, among the different behaviors. But I think it's good. I mean, if HNA would not have been there, well, first we would not have had the cash, okay, when we need it in a given moment. So we need to recall that. Second, today we are launching a company, a joint venture in China, that I think will be operating 6-7 hotels at the beginning, with plans obviously to grow. But that's something we could not have thought if HNA would not have in there. And I think it's great to have a shareholder with financial muscle. You know, I think them and any other. You know, I always welcome shareholders who bring us businesses, you know, new deals and fees and everything. Those are the kind of shareholders that you love. You know, and you also have to give something back from time to time. But I think it's good. So I think having them on board is very good, very healthy. And I have to say that they have always looked to everything with long-term view, you know, with this. And I think when you go into a 5-year plan, trying to turn around the company, you know, I think those kind of attitudes help you, you know, because not everything is perfect every time. You need to invest short-term to get something. And I think so far they have always been patient to see, okay, the right things will give results. I think that's good. That's very good.
Thank you. Richard, if we get onto the customer for a moment, and Jeff, you've just touched on it, this whole move to try and drive, obviously, the customer direct. Your trial with Holiday Inn Express seemed to go very well. Can you just say a little about how that worked for you and whether you think that's the start of sort of maybe pushing back the tide?
Yeah, I don't really like the pushing back the tide terminology necessarily. I mean, I think we, as an industry, you know, as a brand owner, we're trying to generate profitable revenue for our hotels. And in our industry, we've always had intermediaries, whether it's old line travel agents, whether it's meeting planners, whatever it might be. And I think the important thing is that we think about those different channels very carefully. Well, we all do. That's part of what we bring. So I think if you've got loyal customers who are interested in a brand or interested in your portfolio or your reward scheme, whatever it might be, who actually want to interact with the company, then we want to tackle those directly. If there are, and there are customers who can be incremental to what you can generate, then we should try and attract those to the properties. And if you think about most of the OTA business today is price-sensitive leisure travel. And those people are very hard to attract because they're not brand loyal, they'll stay anywhere for a price, and therefore if we can attract those and pay a sensible commission to get them, and it's truly incremental, that's fine. Our trial was similar to some of the things that Chris has done, I'm sure he'll talk about it, which is basically being really clear to the customer about the proposition about booking direct, which is some of what you can get maybe additionally. Points obviously being the obvious one, maybe internet, maybe other things depending upon the brand. But also what's really important is that if you're making a price promise, and we all made price promises as the brand about lowest internet rate, if you're making a price promise, you've got to deliver on it. And then the sort of trial you're talking about in the UK is to make sure that the price promise was kept. Because the OTAs have made obviously a lot of business by saying they are the cheapest or the best value. And in many cases that may not be the case without getting into all the regulatory things that are going on. So tidying up the market, making sure that wholesale rates aren't retailed and those sorts of things is really important so that you can make a promise that you get, not only do you get the best rate, you get these other things. And we saw a massive uptick in business booking direct from those people who really would do that. So I think one of the things that we bring as a brand, or we bring as brands, frankly, is managing those channels better and effectively than owners could do on their own. And so that's how we think about it. But there's no question that booking direct and having loyal customers, not just loyal to that hotel in that market, but that brand in the market or globally, is actually how we drive a lot of our incremental value. So it's a huge focus and a huge investment for us.
Chris, the Stop Clicking Around you described as the biggest marketing campaign in Hilton's history. Is that really working?
It is, and I think it follows on what Richard said. It really is just trying to make sure our customers understand, those that want to be loyal to us and want to book through us, and some clearly, as described by Richard, do not, and we want those customers too, but many do. And I think over time, for a whole lot of reasons, I think they have been confused by a lot of the intermediaries out there to think that they're getting a better value and potentially even a better experience as a result of buying through other third parties. And what Stop Clicking Around is about is really just trying to make the customers that really want to be loyal to our system understand that in the end they are clearly getting the best value, and because of all the things that they get as a result of being an honors member on the digital side that enhance the experience, the best experience. If in the end they still choose, and it is heavily sort of leisure oriented and weekend business, to not be loyal to any brand and they want to go through intermediaries, of course we love all our customers and we want those customers too. And in that regard, if we can bring a customer in that we otherwise wouldn't be able to bring in working with intermediaries, we want to do that. And we have good relationships with a whole host of intermediaries. But I think there's been, by no fault of anybody's in a sense, there's been, I think, a lot of damage done in the industry in the sense of creating a misperception with all of our customers of where value is and where the best experiences are. So this is a huge global campaign, every region, every hotel, every team member in the world being activated to just sort of right-size that and make sure that the customers that really do want to be loyal and be direct with us get that this is where they're going to get the best value.
Wolfgang, you have a similar view. I mean, how do you see this move? And I mean, it's obviously all about transparency of pricing, but also building loyalty, right? So if you tie it in and connect it with the loyalty program, then it becomes all the more powerful, right?
Critically, because we have to have the engagement with the customer directly. We've got to build this loyalty. And the vehicle that we have is the loyalty system, that we all have multiple millions of members, but we haven't been good enough really in communicating and telling the stories and engaging with the customer. And I think that's what we have to do. And I think rate parity, when you look at what's happening in Germany with the ruling Booking.com or IHIF, when you see what's happening in France or in Scandinavia, it's a question of time now that really across Europe we can really compete in a way that we can offer directly the best price.
Jeff,
and that is then when what Chris is saying, what this understanding from the customer is disappearing, that I gotta go to an OTA website to get a good deal. It's wrong. They can get a fantastic deal with us directly. And then we can build up the relationship, market with them directly, and that's what we want to do. And that's at the lowest cost, which drives then the profitability to our owners and to our system.
So it's a re-education program. Yeah. Jeff, you've said recently that loyalty programs are overly complicated and have become devalued. Why do you have that view?
Because they have. I think the point Wolfgang just makes on storytelling, in terms of just how many levers and layers so many of our programs have with the award redemption criteria, is what's made them so complex and what's made them more less valuable. So the hotel company loyalty programs that do it well have made it less complex, are doing a good job, as Hilton Honors is doing right now, in terms of telling their story, but making that what everybody is looking for, that promise of a free night, easily attainable. And that is, as I think all of us have said, is absolutely critical to get those bookings to us at our brand.com websites.
So the holy grail is getting the guy to come to your website direct.
It's share of occupancy. It's all of us. Federico said a little while ago, people pay us a fee and they expect something for it in return. They expect contribution. We all have great brands, but it is all about the share of occupancy that is coming direct to them, and the share of occupancy that is coming through our programs. I would say probably, I know with us, and I guess with most folks up here, are more coming and increasingly coming through our loyalty programs than through any other channel. I mean, that's where we've seen the largest increase with our owners year on year. It's because we're making our programs less complex, because we're increasing the value of what those points mean to the frequent guest, and making it easier for those guests to attain what everyone wants, which is that free night.
And so following up on what Jeff said in my earlier comments, I think what's happening, I can certainly speak on behalf of Honors, and I suspect others are doing it, is really to make Honors a club that is friendly to all travelers. I think a lot of us have grown up in the business. Frankly, all of the loyalty programs across a broad range of the industry, travel, the airlines, has been really oriented towards very frequent travelers. So I said to our team several years ago, just because somebody only has the opportunity to travel once or twice a year, is it that we don't like them as much? Now, we may differentially treat somebody that travels 100 times a year better, or they may get an even better value than somebody that travels once or twice a year, but we have to make it a compelling value proposition for for all travelers, including infrequent travelers. We need to make Honors a club that has real value. This is part of the issue of sort of a re-education, is that this is why we've had intermediaries that have disrupted the space, is because I think we as an industry have focused too much on just the frequent traveler. Don't get me wrong, we're not going to forget the frequent traveler, but we need to make it more of a club and a more compelling value proposition across the board for everybody. If we do that, I think there's tremendous opportunity, not just for channel shift, but loyalty and greater contribution to overall system-wide occupancy. For us last year, we were at a record. We had 52% of our system is driven by Honors.
So it's re-education, transparency, getting the loyalty right. Richard?
Yeah, just picking
and a real value and a real value proposition, not just, it's education, but also creating a real value proposition. Sorry.
No, just picking up on what Chris said. We published our annual trends report recently, and the theme of it was meaningful membership. And you can be sort of cynical about what people want, but I think you're seeing it in many walks of life. People want, and it does vary a bit by region and by country in terms of what they want from something like a loyalty scheme. But what people want more and more now is to feel connected to a brand and to a business. So because life is very complicated, we're talking about the OTAs, but there's hundreds, if not thousands, of intermediaries out there. It can get very confusing. So customers want to be connected to a brand, not just in the hotel industry. And clearly the loyalty scheme, IHG Rewards Club in our case, is the way that you do that. And as Chris said, it's not just about the frequent travellers, but it is about that connection. And there's elements of personalization. How do you do that? How do you get to know your customer? You get to know because you've got data and they want to share that data with you. And it does become a really powerful tool. And there's an interesting stat. So again, as with the other guys here, sounds like we're all the same. We like to think we're all very different. But one of the things I think we've all done is to have reviews on our websites. And it's actually something we piloted 12 or 15 years ago. I wish we'd done it then and we didn't, and TripAdvisor came. But what we find now, today, is that we get more reviews on our website than on any other third-party website. And the reason is that if you are a Holiday Inn customer or an IHG Rewards Club customer, you want to know what other Holiday Inn or other IHG customers think, not some random guy who happens to have stayed at a hotel. And I think it really talks to the connection that customers want, with a brand or with a business. And with, we have heritage brands sitting at this table. Intercontinental celebrates its 70th anniversary this year. And again, we should build on that heritage of what hospitality brands stand for. And having customers come to that hospitality brand, not an intermediary that may have just been around a couple of years and just offers ostensibly a good deal. And I think that it's very important that we remember what customers want, and it is about value. It's not necessarily about cost and the cheapest price every time.
So talking about heritage brands, Federico, 50 years from now, is Airbnb going to be a heritage brand? You have famously said that when you stayed, I think, some time ago, because you were sleeping on someone's couch, that because he didn't charge you for it, that meant that it was, an act of friendship, but that if he had charged you 50 euros, that was a sale.
Yeah.
So you fundamentally dispute this concept of the sharing economy. You've described it as the selling economy.
It's just semantics. But I fully, but it is absolutely like that. When you said that at the beginning of the introduction, I think it's actually selling economy, and it's fine. I mean, we all have a selling economy, and we are all proud of that. So I think it's great.
So you're fine with Airbnb?
Well, I'm fine with any business that is legal, well-regulated, gives safety to consumers, and is
so with those caveats,
is properly organized. So, but I'm absolutely fine. I'm absolutely fine. I think what matters is, at the end, I'm a firm believer on the consumer. At the end, and I recall I was, 6 months ago or 12 months ago with someone from Airbnb, and I said the same. I mean, at the end, the consumer needs to choose. Where they want to stay, which level of safety, which level of service, which level of... But I think fair competition is important. I always said that it's different to have a host than to have a ghost. And when you look to towns like Barcelona, and you see that nearly 60 to 70% of the inventory has ghosts and not hosts, then that's a different business. But again, this is all at the end, the consumer decides what to do, how to do. And I think yes, the ability to have a brand is to give a relevant service, comply with what you promise and do it long term and do it every day. So if they do it like this, then yes, they will be. And as I said before, I think in the same way that in hotels there's a lot of opportunities to grow share for a chain like that, then there's another market opportunity for Airbnb and for many other apartment selling economies. So I think, yes, why not? If it satisfies a consumer need, then the consumer will.
Fair enough. Jeff, you've been in the rentals business for a lot longer than most of us.
Here in Europe, yes, we have been.
You've described the analyst community and a lot of the commentators on Airbnb as being mesmerized and fundamentally misunderstanding how it actually works and what level of threat it actually represents, which I'm reading means you think it's less of a threat than a lot of people seem to be intimating or suggesting.
I do, and we've all talked about this a lot.
Too much.
Too much. Focusrite, which covers the vacation rental business, which, as you say, we are the vacation rental leaders here in Europe. We've bought dozens of vacation rental management companies where it's our exclusive inventory that we manage across Europe, and that this is where the rental business was born in Europe. Focusrite covers the industry and is, in fact, we brought them to an HNLA event the other day with our CEOs, and Douglas Quinby, who's got more data on this than anyone, was very quick to point out that where the hype falls is in the analyst community that views every unit that any listings business say they have up on their website as new supply. And we know that to be not the case. Why? Because the average vacation rental owner lists his or her unit approximately 5 times, 4.8 times. 1. 2, they don't rent it for 365 days a year. They rent it for an average of a month. And 3, whether it's Airbnb or HomeAway or VRBO, in that order, those are the 3 most recent entrants. Renting these units have been around since Jesus and Mary and Joseph checked in to the inn. It is
Joseph and Mary checked in.
It is established, and he came later. It is an established industry that's been around for a long, long time. They have as Larry Molganeski from Hotels Magazine wrote a very interesting piece on why we shouldn't, as hoteliers, be scared of Airbnb. They've got a great website. They've got great search. They've got beautiful photography. But to the extent that it is new supply, it is just not the case. What we all should be concerned of, and what we're very concerned of, and what Chris and I will be talking in DC with Catherine Luger about, where we're very concerned is the illegal condominium, the condominium
legal hotels.
The condominium owner who is illegally renting condos on a nightly basis where local zoning and local regulation prohibits it. Taking something off of what was rented as a month and suddenly rented in New York City or in San Francisco or in some of our major capitals on a nightly basis. That, one could argue, is new supply, but is a very, very small piece of our pie, and I do think it's a lot of hype.
Chris, you've said quote, I'm not scared of B&B.
I'm not afraid of Airbnb. I think it's, others have talked about it and said it well. I do think it's a real business. I do think it's a business that's been around for centuries. I do think it's a business that's been around a long time, but where there's a lot of efficiency being brought to it. So I think it's a real business model. I fundamentally believe that it's satisfying a different need that a customer has. By the way,
it's stimulating.
that it stimulates, by our math, we think at least half of the travel is new travel that wouldn't have occurred otherwise. And the other half may, in theory, be competitive, but I think it's satisfying a demand. All of us probably on occasion have some of our customers that are loyal customers use it. By the way, I've used HomeAway for the last 30 years myself to rent houses and things, while I've been a pretty loyal hotel stayer myself. So,
and most of it is weekly inventory.
Yeah, most of it's, there are a whole lot of things. I think of it real simply. This is sort of what I learned the first day of business school, which is, remember the business you're in, the core business you're in, because the minute you forget the core business you're in, you're going to generally veer off the road and you're going to probably do some damage. The core business I think we're in, you heard Richard talk about it, customer experiences, connections. We are in the business of hospitality, okay? That's what we do. We take terrific products at a bunch of different price points and we wrap it in amazing experiences. Said simply, we wrap it in hospitality. Now, at the lower end, it may be a little less hospitality. At the luxury end, it's a whole lot more, but we are always wrapping it in unbelievable hospitality. So very high quality, consistent delivery of products and services. We are not lodging. I think when you get into that world, it is a lodging business. It is more of a housing business that is satisfying a need, which is generally a longer stay, leisure, value experience. So does that mean there is, some competitive? Of course there is, right? Even amongst our own brands, within our brand families around the edges, we have competition. So of course it'd be silly to say we're not at all competitive. But the bulk of the demand, I think, is satisfying something very different that the customer wants. It's lodging, we're hospitality.
Wolfgang, you want to say something?
I agree with everything you said, but there's a but, I think. And it reminds me a little bit when we listen to ourselves. 10 years ago, when we talked about the OTAs, we didn't take them serious. We said, oh, we should watch it. And then before we knew it, our customers were gone. Now, with the OTAs, the customers are still in our hotels, at least. We pay a higher commission, but with the Airbnb, they're gone. And I think we need to, as an industry, be a little bit more active. I think we need to learn a little bit from the taxi industry, and when you see how they took on Ubers, and I'm not suggesting we should go on the streets of Paris and put up barricades, but I think we should become more active and really stop the discussion about Airbnb also being there sort of seen as a fluffy, nice, friendly, it's all about sharing. It's hardcore business. It's hardcore business, and they are competitive. They're depressing our rates in key cities. And I think it's time that we as an industry become more outspoken and demand what Frederica was hinting at, of really a level competitive playing field. They got to pay the taxes, they got to register the gas, they got to comply in the same way as we do. And then we talk more about a fairer competition. And Richard, I think that is not just going to happen.
Richard,
I think we have to do that.
Oh, you agree?
I agree with
everything that's been said.
No, I agree with everything that's been said, and we've probably talked enough about it now. But just to come back to that point about consumer proposition, right? So we have within our brands, as do most of the guys up here, we have extended stay product, which is one of our faster growing businesses. We have service departments, which has been pretty good, particularly in the Middle East and Asia. We have holiday and club vacation, which deals. So within our brands, and I like that hospitality lodging differentiation. I think that's a good one. We offer some great products that meet a lot of the same demand. And as Chris said, there are people like him, like most of us, who stayed in apartments. I've booked through Wyndham, English country cottages, or whatever it is for years. So you're right. We should make sure that we have the right conversation out there, but we shouldn't ever forget and not be proud of the products and the brands that we have and what we're doing. We are hotel companies, we're hospitality companies, and lots of people want that, so it is incremental. And last thing I'd say is that the lodging market is growing and has been for many years. We've talked about that. And if you actually look at the data, the branded hotel market over the last 10 years has grown significantly faster than the non-hotel lodging market. And I think we should focus on it, but get on and focus on looking after our customers in our businesses.
Can we turn to an area where the industry is frequently criticised and seems, quite frankly, slow and lumbering? And I know you're all thinking, well, there's so many things that could fall under that. Jeff, you're on record of saying the biggest trend right now is the cloud.
Yes.
You're thinking, thank goodness, it's the cloud question. Your recent partnership with Sabre, I mean, you've said it gives your franchisees freedom from worry. What is it about the hotel industry that we don't appear to be able to do technology? Is it because we shouldn't be doing it? Or we just don't have the scale
we have to do
ability?
it, and everything will. All of our businesses will move to the cloud. That was our opening presentation in terms of how seamless that connectivity needs to be. Richard said a little while ago, there's hundreds if not thousands of intermediaries. There are thousands of intermediaries. And we, as a company a few years ago, made the decision that we should not be in the business of building a central reservation system to two-way seamlessly interface to those thousands of intermediaries. It's not our core competency. And yes, so we partnered with half a dozen technology partners on a long-term basis. We agreed with Sabre to be our foundation on both the CRS and the PMS side. We're a couple hundred hotels into it, and those hotels are seeing big lifts in their contribution. We want to be in the business of building our brands, of building our loyalty, of building what drives to that seamless connectivity so that that franchisee does not have to worry about the server going out in his or her basement because it's connected to the cloud.
And Richard, you're doing pretty much the same thing with Amadeus?
We are with Amadeus on the CRS side, and we'll see where it goes. But absolutely, we're not software companies. You're not going to get the best software engineers working for any hotel company. So stick to what you're really good at. And the intellectual property around data or the cloud is where the value is created, not the basic commodity booking system.
And does it pass the cybersecurity risk to someone else?
No, I don't think it's past the cybersecurity risk. I think
minimizes it.
They have much better cybersecurity teams. They have to. It's their core business.
They're both right. Everybody's going to go to that, and there's a simple reason. and that is, as much as I stand by what I said 10 minutes ago, which is we've got to own the hospitality experience, check-in to check-out has never been more important. Given what others are doing, you know, the OTAs, the Airbnbs, the disruptive forces that are accommodating our guests in a more thoughtful way digitally before and after they stay with us, we all have to get better at that. We're all investing. I won't, you know, describe everything. We're all investing in a huge way. You know, we're way down the line on that. But here's the thing, when you say, embedded in your question, you know, hospitality companies haven't done this very well, I think you're right. Okay, and I think Richard's right, and we certainly believe we're not going to be a technology company. We're going to partner with the best technology companies. But, big but, each of us have, the reason hospitality companies have not been good historically is because everybody has, to one degree or another, legacy systems in the PMS and CRS that make it incredibly hard to innovate at scale and with speed. And so the more that these things go into the cloud, the more that you have partnerships with other people, not only can you, I think, have greater security and systems that are easier to use, but frankly, you can speed innovation to being hundreds of times faster than anything any of us have ever done. Think about just a PMS system at our scale, at yours or Richard's, 5,000 hotels each. When you want to roll out a new PMS system in 102 countries, think about what goes into that. Well, in a world where you're in the cloud, my IT guys would fall off their chair. It isn't quite 20 seconds, but it's maybe 3 days of work to upgrade the systems and sort of populate it in the world, because everything is out of the hotels and into the cloud. So I think this is going to be incredibly important. Certainly, we're spending a massive amount of time on it, and I think it's important in the sense of altering the landscape of how we interact with our customers and making it a much better experience for our customers in the end.
Richard, I know you want to say something.
I was just going to pick up on Chris made the point that actually, again, when we think about what are we trying to do here, why are people, buying into our brands and putting them onto your hotels like that, the important thing is go back to that whole experience. And it's not just about booking, it's not just about check-in, it's the whole experience. And when you think about what we can offer relative to other players, whether it's intermediaries or other brands, it's across the experience. And getting customers to use the app, thinking about right from the early days of thinking about your journey to actually arriving at the hotel, to the hotel stay. And that's an area where, as hotel companies, hotel brands, we should never let anybody come in and impact the hotel stay, which some of the OTAs are trying to do. We should own that, look after our guests, and then afterwards in the whole where people are sharing their experiences and so on. So there's a whole spectrum about where we can define the brand and the experience, and that's what we should own, and that's what, when I talk about intellectual property, that's what we should have. We should use that data to enhance our customer experiences, enhance return for owners, and the rest, we can let other people manage.
Can we turn to business model for a moment? The sort of shift that we're seeing towards franchising. Maybe Richard, I mean, you obviously got a fabulous franchise business. It's dominated in the US for a long time. Do you imagine that people will still be signing management agreements 10 years from now, 20 years from now?
Yeah, I do. I think if you look at it's horses for courses. I think to be a successful brand, third-party brand today, then you need to be able to manage and franchise equally effectively in the right markets. So a lot of owners want management, and I think, yes, there are third-party managers who come in, but I think the more cooks you've got in any particular kitchen, the harder it can be actually to drive performance. But I think there will be people. But I also think as an industry, we're a little hidebound in these definitions of, we've got franchise here and we've got management there or leasing there. And actually, I think there's a continuum of services, and more we think about what do different owners need in different markets for different brands, and how do we sell them, on that proposition. So I think you'll see evolution, but there will be people who want a brand to run their asset.
Chris, with the spin-outs that you've announced, the timeshare and the real estate going into the REIT, I mean, that makes you much more of a pure play, asset-light, fee-based business. I mean, is that ultimately sort of the focus now?
That's exactly the way to interpret that. I think there are three primary reasons for our doing it. One, dedicated teams to run each of those businesses, because our 3 segments really are 3 different businesses, dedicated investor bases, because having them all together, as great as each one of them is individually, becomes a very complicated story for investors, many investors. Also activating all the businesses. Reality is, we activate our management franchise business quite fully. We generally pretty fully activate our timeshare business. It could probably use a little bit more capital. And we don't activate, from the standpoint of new unit growth, our real estate business at all, really. So there is value to be garnered as a result of doing that. And last but not least, it's about capital market and tax efficiency. So when you put all those 3 things together in a package, we think long term it allows, as independent companies, each of the companies to drive faster growth and greater value. So that is clearly where we're going. We're way down the path in doing it. Obviously announced it. We'll get it done by the time the year is out, and we'll be still a very big company, but a much simpler, more focused company in each of the 3 cases.
Wolfgang, I think 90% of your signings last year were management, 10% franchise, no leases. I mean, you've obviously left the lease as a model firmly in the rear view mirror. I mean, do you see any slowdown in the appetite for management, or based on that you wouldn't, right?
No, we have 20% of our business is franchise, and I think we need to approach it from a customer perspective. In that sense, the customer is the owner. What does the owner want? And depending on the market, there are a lot of markets where owners really still want our management expertise, and that's great. If you look at the emerging markets, for example, we talked about Africa, all our contracts are asset light, they're all management contracts, and there you don't have the expertise yet of the operator who knows how to operate in an emerging market. You don't want to entrust him the brand. So I think that will continue, and I think the management contract will continue to exist. We need to be flexible in the terms. We need to look at how we can find solutions which is not just a straight management contract as it used to be, but that will continue, and I think that's where our expertise comes in as operators.
Federico, agreed? Management still has a future?
I think maybe on this I'm a bit different too, because we manage nearly all the hotels we have. And eventually, on the day we are bigger, we may think about something different. But I think that gives us a competitive edge. I think we operate better than many other companies. And I think the whole company thinking is not only towards the brands, but actually to be excellent in execution in the operations. And I think I like to go to see hotels from competitors who are franchised, and then I try to tease, okay, how strong is the link between the franchisee and the operator, and I'm very happy when I leave many of them. Because I see that my link is better. But we are still small. But I think it's important to, as someone said, what are you good at? And I think with the science we have, every time someone comes to us in franchise, I say, but why don't you want me to operate the hotel? And they say, no, we are also operators. But that me too. So it's like, I think it's maybe a matter of, time, state of the company or size of the company, but we like to operate. We like the operational side of it.
Jeff, share those views?
Absolutely. That's why we're here at IHIF. Well, our management business last year grew 40%, albeit it's the smaller piece of our business. But whether it was this morning or this afternoon or tonight's dinner, we are increasingly, and Wolfgang said it best, there are parts of the world people do not want to manage their own assets. In Europe, Africa, Middle East, that's why we're here. There's a lot of growth out there to be had.
Well, ladies and gentlemen, I'm fairly conscious that we're probably keeping at least some of you from drinks and various other activities, but most notably cocktail parties and conference calls and goodness. So I just want to say thanks to the panelists. I think they've been tremendous, and I'd like you to do the same if you could. Thank you very much.